How would you feel if I told you that you could effortlessly boost your savings by 30% without changing your spending habits? Sounds too good to be true, right? Well, it's not. In fact, it's entirely possible thanks to something called smart banking. Imagine if every time you spent money, you also earned money. Imagine how much more you could save and achieve your financial goals faster. It's like getting paid to spend, isn't it? And here's the best part. It's not a secret or a hidden fee. This is an open secret. But most people are unaware of this. Here's the truth. Banks and credit card companies make billions of dollars every year by selling your data. They collect information about your spending habits and sell it to marketing firms, who then bombard you with targeted ads. But what if you could turn the tables and earn money from the same process? That's exactly what smart banking allows you to do. You see, banks and fintech companies want your money because they make money from holding on to your cash. So they offer you various types of bank accounts with different interest rates to incentivize you to keep your money with them. For example, some banks pay higher interest rates on certain types of accounts like certificates of deposit or CDs, while others offer cashback rewards or other perks for using their debit cards. By using these tools, you can effectively get paid to spend money. In this video, I'll teach you everything you need to know about smart banking, including the best type of account to use and how to maximize your earnings. Whether you're a student or an experienced investor, you don't want to miss out on this valuable information. So grab a pen and paper and let's dive in. Let me introduce you to the concept of yield. Simply put, yield is the amount of money you earn on your deposit. Think of it as a percentage of your total balance that the bank pays you for keeping your money with them. For example, if you have $1,000 in your bank account and the bank pays a 1% yield, you'll earn $10 in interest every year. The higher the yield, the more money you'll make. There are many factors that determine the yield you'll receive on your deposit, such as the type of account you have, the amount of money you have on deposit, and the overall health of the economy. Different banks offer different rates, so it's important to shop around and compare before making a decision. However, generally speaking, the national average yield for a high-yield savings account in July of 2023 was only 0.42%. The highest yield for a traditional savings account during the same period was 1.05%. So you may want to look elsewhere if you want a better deal. Luckily for us, there are a few online banks that currently offer yields of up to 4.2% on deposits, which is much higher than what traditional banks typically offer. Now here's the thing. You don't need a lot of money to start earning big bucks with these high-yield savings accounts. In fact, some banks will even pay you a higher yield if you have a smaller balance. This means that even if you only have a few $100s to spare, you can still earn a decent amount of interest. Plus, you can always open multiple accounts at different banks to maximize your earnings potential. Now, you might be wondering, is there a catch? Well, yes, there are a few things to keep in mind. First, the interest rate you earn on your deposit can change over time. So it's important to choose a bank that offers a competitive rate and has a history of paying out high yields. Additionally, some banks may require you to meet certain requirements to earn the highest yield, such as setting up direct deposits or using their debit card a certain number of times per month. But honestly, these requirements are pretty easy to meet, especially considering the amount of money you'll save. And that brings me to my next point. It's crucial to remember that although having your money in a savings account is better than keeping it in your checking account, it's still not ideal from an investing perspective. Although some banks allow you to earn interest on your money, the rates they offer are typically very low and may not keep up with inflation. If you want to grow your wealth, you'll need to do more than just save. Consider investing your money in stocks, bonds, or other assets that have the potential to appreciate in value over time. This way, you'll be able to take advantage of the power of compounding and earn a higher return on your investment. So even though having your money in a savings account can provide some security and peace of mind, It is essential to think about the bigger picture and consider investing your money to ensure long-term financial success. Now, let's talk about one of the best places to keep your money. A high-yield savings account is a type of bank account that pays a higher interest rate than a traditional savings account, allowing you to earn more on your deposits. These accounts are offered by online banks and credit unions and typically have lower fees and minimum balance requirements than traditional banks. Additionally, high-yield savings accounts are FDIC insured up to $250,000, meaning that your money is safe and secure. With features like easy access to funds, competitive interest rates, and low fees. High-yield savings accounts are a great option for anyone looking to maximize their earnings potential. Let me tell you about another fantastic place to stash your cash. Money market accounts are like high-yield savings accounts, but they usually have slightly higher interest rates and may require you to keep a higher minimum balance. Additionally, they often come with check writing privileges and may offer more robust customer service than online-only banks. Next up is a certificate of deposit or CD. These accounts typically offer higher interest rates than savings or money market accounts. But your money is locked in for a set period of time, and you may have to pay a penalty if you withdraw funds early. However, if you don't need access to your money for an extended period, a CD may be a great option to earn a higher yield on your deposit. Next, I want to talk about another exciting way to boost your earnings: cashback rewards. When you use a credit card to make purchases, the bank or credit card company will typically charge a small fee to the merchant. The bank or credit card company will typically share a portion of this fee with you in the form of a cashback reward. This reward can be redeemed for a variety of goods and services or simply credited to your account. If you use a credit card responsibly and pay your balance in full each month, cashback rewards can be a great way to earn extra money on your everyday purchases. Some credit cards even offer bonus categories where you can earn a higher percentage of cash back on certain types of purchases. So it's worth shopping around for a card that fits your spending habits to maximize your earnings potential. But wait, there's more. You can also earn cash back through a rewards program, unlike credit card cashback rewards, which are typically capped at a few $1,000s per year. Rewards programs can earn hundreds of thousands of dollars in rewards annually. Rewards programs are offered by major retailers and service providers and allow you to earn points or miles for purchases you would make anyway. These points or miles can then be redeemed for gift cards, merchandise, or travel. For example, you could earn points for grocery purchases and redeem them for a free grocery trip or use miles to book flights and hotels for your next vacation. Many rewards programs also offer bonus categories where you can earn a higher amount of points or miles for specific types of purchases. This is a great way to maximize your earnings potential and stretch your budget further. Now, before we wrap up, I want to emphasize the importance of using these strategies wisely. Don't fall into the trap of lifestyle inflation, where you spend more money as you earn more money. Instead, continue living within your means and use any additional income to boost your savings and investments. And never forget the power of compounding interest. Even small increases in your balance can make a significant difference over time. As you gain more experience and knowledge, you can expand your financial toolkit and explore other investment opportunities, such as real estate or starting a business. Just remember to stay informed, do your research, and make smart decisions. And that's all I have for today. Thank you for watching this video. If you enjoyed it, please give it a thumbs up and subscribe for more content like this. Don't forget to stay updated on the latest financial tips and tricks. Until next time, happy investing.